I'm Rocky Outcrop. This is a Bitcoin technical analysis episode. Thank you so much for joining me. I really do appreciate it. If you take some value from this episode, then please go ahead, hit that subscribe button. Because we put out good, valuable content. I say we, but it's me, isn't it? I put up good value content on a daily basis, and I think that you can always find something to take away here from the episodes, which will really help with your trading. So let's get into it. Let's take a look at the charts. Up behind me right now, I have the 2-day Coinbase chart open, and there's a lot of drawings on there. I appreciate it. There's a bit of noise. I'll just hide that for the minute as I introduce kind of what we're going to talk about. Now, I want to kind of get a big old concept across in the space of, a short episode here. Kind of keep it under 10 minutes if I can. But, it's difficult to do that. So we'll see how we get on. Overall, we've got a couple of questions to ask, right? We've got a couple of questions to ask, and we've got a couple of zones that we can look to so we can get, clarification on that. Are we in an upward trend or are we in a downward trend, right? And if we just take out the measuring tool and just use this to kind of highlight an area up this period here, all in the background of this box, that's an upward trend, right? And this period here, over this side, that's a downward trend. As you can see, looking between the sort of the timelines and everything, you can see that we've had these highs up here in the 1st of June, lower highs, lower highs, lower highs, lower lows so far. Okie dokie. But this is just on the right-hand side of what really effectively is, and if I just drop the drawings back on, a symmetrical triangle. This will rejig itself in a second, I'm sure, so it actually fits. I don't know why TradingView, yeah, there we go. Don't know why TradingView's been so slow for me lately, but it has been. And so anyway, we've got this sort of symmetrical triangle on the go. Now, it's quite clear on the daily time frame here, but if we go back over to the other one where we were before, it's not so clear, especially with drawings on top. It's not so clear if this is symmetrical or if there's a big old rising parallel channel in the background here, or if it's a rising wedge or something else. If we go up towards the 2-day time frame, then because of the lack of the high that we got on the 1st of June actually closing up here above the highs that we had in May, actually does look more like it could be a symmetrical triangle, or indeed perhaps an ascending triangle. Now, the ascending triangle is a more bullish pattern, but it doesn't work quite so well with the placement of this top line, really, given the price action that we've had since June, because we've not actually come back up here and retested it. All that's really happened is we've had these lower highs on the go. So that what we can see then instead, if we look at the blue lines here, is kind of perhaps a descending triangle formation since June, which of course is a more bearish pattern. If we look towards the 24-hour time frame, you can put that same price action within a falling wedge. Falling wedges are more often than not bullish patterns. Now, that's quite, don't want to give people the wrong impression. It's not like they're 90% bullish, 10% bearish. It's, it's just that it's an uneven split with the leaning towards the bullish side for breakouts. And, you could have hoped for one at various times. Now, we would have been hoping for one if we're kind of wanting this to go bullishly here at the 9450 area over there on the 9th of July, or indeed for it to come up here and kind of undo the head and shoulders and prove it and invalidate it and make it a failed pattern, which would work for an upward move here at that 9,350 area and go above the 236 Fibonacci retracement that we had on from the head of that head and shoulders there on the 8th of July and move above it. But that's not happened, And what hasn't happened is we've not really sustained the price action within the confines of this background pattern. So if I just go jumping on down the way to the lower time frames, you can see that the way that I've positioned this one, and you can see actually I need to kind of stretch over to the right actually, is a wee bit more generous and has allowed for the price action to come back into the pattern today. I'll just stretch it up a wee bit. Sure. It's kind of come back into the price action today. And these things are always so subjective. I'm looking at that and thinking maybe it should be more like that anyway, but we're still on their way down to it. But then you're not getting an adequate amount of touches, in my opinion, really overall. But we're still within the parallel channel type concept, really, in general, until we break down below all these other areas that we have identified, and we'll come up to that in just a second. But starting off here, in the higher time frames, where are we just now? So in terms of this upward moving purple line, we're we're outside it at the minute. Is it possible to rearrange this to make it so that we're still inside it? Well, yes. If we use wicks alone, then we could. But of course, that's playing with fire a little bit, But I'll do that for now anyway, just that the conversation is out there and it exists, so that we can talk about these things. And I'll leave it as an ascending triangle just for now as well, even though that is a little bit generous. A little bit. In the background for the purple one, sorry. So you can see then that there's this, so that it does help us identify anyway key areas, where we could stop being generous with movements of this purple line and say, look, we truly are moving outside of that area. There's no debate about it. And I think that can kind of clearly comes in at that 9,050 area. And we've spoken about that so often, over the last wee while. Like actually closing down below 9,050, and if I go down to the 1 hour time frame where we've got various notes, by the way, on the channel, quite often I put notes across different time frames and stuff like that. This is the one that we have here in terms of price targets on the less than 4 hour box, and we're calling it. And you can see, 9,350, 950, 8,950, 9,545. These targets are really quite crucial, and they still are. They remain so, even though days and days after having drawn these out on the low time frames. So actually, if there's one takeaway from today's episode, and the concept that I'm really trying to get across is that you need to look across the time frames. Okay, you need to look across the time frames and build up a bigger picture of where we are. You want to be able to establish, what are the boundaries of the bigger time frames for us? What are the boundaries of then going down the time frames in terms of where you could be moving to or from, so that you can get sort of tolerances and know that when you've exceeded or you've exceeded or not met those quite yet, in order to kind of assess the way the price actions go and to help you with your trading, right? And that's what we're trying to do here in this particular episode. Although, I didn't want to label it like that right off the bat. It is a difficult concept to kind of get through, get across. So anyway, in terms of the 22-day time frame, if we see movements down below this 9,050 area and actual closing down there, then you could very realistically expect the prices to come down and at least test the 8,900 price point, where we have a 236 Fibonacci retracement area and an 886. Now, an 886 is quite a common retrace point. It's quite a deep one. It's very deep in terms of these Fibonacci things, but it's quite a common one. And of course, our pal, what's he called, Scott Carney from Mr. Harmonics, he likes that number as well. Although, despite being one of the most, no offense to Scott if you're watching, I think you're called Scott, you're very much one of the most arrogant writers out there. The way that you speak is very, very much blowing your own trumpet. You do at one point give credit to one of your friends for having introduced you to the 886, which of course is the square root of the 618, right? Is it, or the 786, whatever, something like that? I don't know, some sort of maths jazz, And so well done to you for not being quite so big-headed there. Anyway, if we do move down below that area, we're going down below the 618 on this Fibonacci retracement. So we've had various opportunities here to take advantage of the golden pockets, moving into this price point and then moving back out of it again, including today, where you can see the prices came down as low as 9,054. So really giving you up that golden pocket area for capitalizing off if you wanted to long it. And of course, then you're sat $100 up from that entry, and that's good profit. Okay, that's good. Well done. So, not financial advice, none of this financial advice, but what we really need to see happen is for these other areas to be pushed beyond. And I'm going to find those other areas for us by looking down the time frames, because as you can see, this is quite a broad structure. Overall, you can be looking up towards that 9,350 area to really break out of this zone, 9,250, 9,350 area, really break out of this zone and get past the 236 on this Fibonacci retracement and try and go up towards the top side. Sure, going down the time frames, then you can see there's this other Fibonacci retracement drawn in here with a 236 coming in at 9,195. We've spoken about this quite a bit on the channel recently. You'll remember if you subscribe. Again, subscribe for the value, lots of value, good value. In here at 9,195. So if we were to move up beyond that area, that would be quite positive. And you can see here is we've come up quite close to that at 9,182 today here in this particular exchange, but we've not actually managed to make it above that zone yet either. So that means that we're still in for potential downward price action. Still there, not got a valid Fibonacci on our hands, not moving towards the top side just yet. So let's look on down again even further and see if there's anything else. Well, we know this is coming in at around about 9,050, this parallel channel idea. So there's that yet again. And we also have a Fibonacci, a golden pocket zone in here as well at that 9068 area that we spoke about already a moment ago. And where's my writing saying golden pockets is? Yeah, here. So we've got these two golden pocket zones. If we move beyond this one, then we could easily be going down towards the next one, like we saw in the recent price action off the back of that head and shoulders. And we did get that there with this movement down from the head and shoulders. So if this were to be as much as that actually needed to go to do that, to satisfy all of the bearishness there before moving on up to the top side, that could be understandable from a Fibonacci retracement point of view and a head and shoulders point of view, but it very much becomes invalidated as soon as the prices are opening and closing below those levels. So that's what's to be looking out for. If you were to look then as well in terms of the lows and stuff, now let me just take off all the drawings again and go back up to the 24-hour time frame to point out where we need to see the price actions sort of, stay above in order to not be doing certain things. So as we spoke about, is this an upward trend or is this a downward trend that we're in? Overall, looking here, and I forget if I actually did this in this episode already, so forgive me if I'm repeating myself here. This here section is an upward trend in the background up until the 1st of June. And then from the 1st of June to where we are now, this here section has been a downward trend. As you can see, lower highs and lower lows. Beforehand, we had higher highs and higher lows. So at what point will that change the overall bigger picture? So from a big point of view and from a small time frame point of view, then we can look towards the lows to find out where that would be. So starting off here at 8,991, so let's just call that 9,000, and then further down there at 8,700. Moving beyond this one here, the first one that I said about in the 27th of June low, that would just be putting in lower lows. So we'd have these lower highs and lower lows, and then if we go down below that price point there on the 25th of May, we're not only be doing that, but we're actually going lower than the lows here during this upward trend, so that's starting to change the macro picture, which you might agree with. And then you can see the volume's been tailing off this whole time, which ties in with the consolidation aspect of things. And if we go down the time frames and up the time frames, we can kind of put those numbers in different nuanced levels. 8,750. Looking to the left again, 8,570 would be two targets towards the downside should we break down below that 8,889 236 Fibonacci retracement point. And then the upside targets you have, the 9,450, 9,750 are the two sort of main ones to look to see if we can kind of go up towards the top side before we'd even actually have asked the question, are we continuing on with the upward trend? Because to continue on with the upward trend, we need to see the prices going up above 10,200. Now that actually makes sense even from a weekly perspective as well, where you can see the weekly high came in here, but we can at 10,200, the previous one. So you want to be going up above that to put in higher highs, and we haven't achieved that yet. And if we put the drawings back on, you can see that there's various things then that you could look to as well. So let's call that zone up to the 10,200 area fake out territory from a move above this downward sloping weekly trend line. But that's getting ahead of ourselves. We'd need to look towards those smaller term time frame things first off to cascade up the way through them, if that's going to be the case. And looking towards the downward side things then in terms of the weekly time frame, you can see this downward movement since June. I know there's a lot of writing on there. I'll just hide it all, in fact. You can see that down here, we've only really been putting in this low so far, but this flux that we've had over the last couple of weeks could just amount to nothing, and we'd still just say, well, this wasn't ultimately the low. We've yet to put in the low. So let's look at our previous lows then to identify that. 8,700 for that one, 8,715 if you want to be exact about things. So that's all, that's what they have to look to for the price action, right? I think there's a lot of value to be taken away from that. And I think that will influence your thoughts, as you look between the different time frames about things. So let's just put in a bit more value for this episode for people who've tuned in, because I really do appreciate it. Good value things to know about. Number one, for instance, over here on the Bitfinex chart, we have seen recently, in fact, right now is a bad example of it because it's only $5 or $6 above, but keep an eye out for the difference between the Bitfinex chart and the other charts at the moment, because it's kind of diverging away and they're not at the same price level like they have been recently over the last since March, really, as far as I remember, they've been more, or in fact, most all of this year, really, they've been more or less in lockstep with each other, Bitfinex and the other charts. If you've been trading Bitcoin for quite a while, then you'll know that Bitfinex used to have a premium on it all the time. Well, actually, that might be starting to emerge again, and we might see it operating closer to the CME prices, really, than they are to the spot prices. So just keep an eye out for that. That's kind of interesting. Other value takeaway things that we can have here are, of course, the patterns in terms of the CMEs, and where does the bottom of this one come in at whenever it rearranges itself. That comes in at that 9,000 area. In terms of the lower time frames then, and actually trading this, for instance, if you're looking at the 4-hour time frame, and as well, I'm going to talk about divergence in just a second here as well. So, and then we'll wrap up. We've got these. What was the one I talk about there in terms of lower time frames? Trading this thing. Yeah. We can see quite clearly that there's this 50% level that we've moved back up above, which was the zone of the neckline of the head and shoulders zone that we were talking about previously in the previous episodes, and if we were to then go up above the 9195 area, the 236, that would be significant, in terms of the 4-hour time frame. And we could look up to higher targets thereafter, having actually kind of, put in something else. But let's just look and remember that so long as the prices are below 9,270, that's actually just yet another lower high overall in terms of this small time frame thing that we have on the go at the minute, right? So looking beyond these areas, if we break down below the 618s of these two time frames on any time frame, the 618s and then we could be looking down to the 8,700 level. Thereafter, if you really wanted another target thereafter, it'd be 8,570, I think it was. And then on the terms of the upward side, you're looking at 8,250 just in terms of this, 4-hour time frames. So that, if you're trading that with high leverage, you'd be looking, I'm not financial advice, and that's financial advice, you'd be looking to be taking profit there at that point to protect yourself against a retrace or, as part of an overall move towards the top side. Bearing in mind as well, then we've got the 9,350 area where this actually it's over, 9,250, 9,350 in terms of the downward sloping Fibonacci, fallen wedge, and then the fake out territory to that has got two key points to look at: is 450, 9450, and 9550 really overall. And then in terms of moving towards the top side, you have to get above the 9,700 area, and then thereafter up above the sort of the 10,200 area. Because just as a quick reminder, in terms of the weekly time frame, you're not really achieving anything until you go above there, and this whole zone could be considered to be sort of fake out territory of the rising wedge, as we've experienced so often in the past. And as well, be on your guard for hysteria coming from the likes of crypto Twitter giving you frankly really bad advice if you follow any of that, in amongst those zones there and these zones down here. Although people could start to get bearish, after the fact, a little bit too late, and then they might actually be able to ride a move down the way, if that's the case. Now, what else can we talk about here, just to finish off? I suppose I could talk about the broad picture, this descending broadening wedge and stuff like that, but I think that's outside the scope of actually trading this really in the meantime. I suppose I can just kind of finish up by saying that if you were looking for a retrace here, it was actually just going to be like the maximum outside of the Fibonacci retracement area for an ultimate turnaround to go towards the top side. You could look towards this 1618, but you would be putting in lows here across the board, and that would be quite bad. Oh, the divergences. Thank you for sticking with me. I almost forgot. I wanted to look and see if there's divergences. So let's look at the 24-hour time frame. This is a downward trend, like we already identified, is looking towards the lower parts of it, and these lows are. This is the actual low in here, so this is all higher than it, so we've not got any yet. But if the prices do come down here and actually close lower, so they close underneath that 9,860 area again, and then and get a turnaround at the 786, look out for bullish divergence here, because this is a little bit up, higher, and it could be possible to get bullish divergence in around that area. Look out for that. In terms of the 2-day time frame, do we have anything to point out worthwhile? Not particularly. Is there any hidden bullish divergence? Or hidden bearish divergence, sorry. Between these points here, in terms of this downward trend, okay, between the 23rd of June and the 9th of July, there is hidden bearish divergence, okay, on the RSI, the stochastics, on the RSI and the stochastics, there's hidden bearish divergence, so there it exists, right, between those two there. Look out for that yourself. There's the stochastics, quite clear higher there than it was here. So you can see that just now. Let's look down again, lower time frame, and see if there's anything jumping out at us. We have this low coming in here, which is lower here than it was over here, right? Now the trend in this one, in terms of the 4-hour time frame, was trending down until we had our inverted head and shoulders. Until such times as really go below these areas here, like, then maybe we couldn't say that. We've not had closes quite yet below that, so we've not had further lows to make a comparison of quite yet on that one. Instead, we can just look towards this, and on terms of this, it's convergent, with these lows being lower, and it's not got the bullish hidden bearish divergence yet. Although if we do get a high coming in here underneath this 236, I say it goes up as far as 9,180, closes, and then turns around and goes down again, then the likelihood is that you would have hidden bearish divergence on the go here. As you can see, this is coming up higher than the previous peak just here, so it would be higher than this one here, so they would have that potentially as a goer. Anyway, yeah, I think that's going to do for today's episode. I'd really appreciate it if anybody left me any comments with what they would like to see me talking about or anything like that. That'd be cool, and I'll get back to you. And yeah, just really do appreciate you tuning in. I mean, I'm sure there's some value to be taken away in this episode, really, at least in terms of just looking at things with a calm head. Screw your head on properly, stay nice and relaxed, and calm, and trade soberly, without emotions, and you'll do really, really well. Just bear in mind that things could break down if things go past certain key areas towards the downside, or indeed could break up if they go past certain areas to the other side. If you're trading on the low term time frames, take profit early enough so that you're able to withstand any sort of retraces that there might have, because there could be some low level volatility in there. As you can see here on the charts, it's a lot, it's all over the place at times. So thanks for tuning in. I'm going to publish this one. I hope that it's all right. I think there must be some value in there. It's hard for me to tell as I'm doing this, live. And I'm going to move on with the other ones that I'm doing today. So thank you so much for tuning in. I really do appreciate it. I'll catch you in the next episode. I've been Rocky Outcrop. Share it with your friends. YouTube.com/RockyOutcrop. See you next time.